Good afternoon, guys. It's working, bringing you a quick update on Bitcoin. Hope you guys have a wonderful afternoon. We're looking at Bitcoin to the U.S. dollar, 4-hour chart on Bitfinex, guys. And Bitcoin is, we're still seeing a lot of weakness throughout the market. We're not seeing nearly the volume that we need to see to spark any kind of a lasting, sustainable bull run. But as of right now, guys, if we zoom in here, we can see the price came down, broke through, and hit about 6,100. The support down here bounced right back up, came back above 6280, which is also a relevant support. I've kind of redone these supports, taken out the zones, and put more into exact price action on each level. So while there's a lot more levels here, guys, in my prior post here, they're kind of more dialed in. My support resistance zones here, so I do believe these are a little more useful now. So we can see price is operating within this wedge series of lower highs, higher lows, and we're reaching the apex of that wedge now. Again, we're on the 4-hour chart, so it looks to me like in about 12 hours or less, we should see a larger move in one direction or another. As of right now, guys, my bias is possibly to the downside, although we might see a break up, create a bull trap, and only to break right back down, guys. So be very, very careful, even if this thing does end up breaking up. If price does end up breaking up, the first thing I'm going to be looking for, if I just zoom in here, is we're going to be looking at this microstructure. We're going to want to take out the prior high sitting here on Bitfinex. That's at 6623. So if we can get north of call it 6625 is a better psychological number. If we can get north of 6625, then there's a very high likelihood that we may come up, test this support, or excuse me, this resistance up here at about 6750. Now remember, I've got that highlighted in orange because that's a very, very relevant resistance. It was a support, will now act as resistance. Remember, that's the top of this inverse head and shoulders, guys. I do expect that to act as a very, very strong resistance if we do end up coming up. If we can break north of that, that's going to be a very bullish sign, and at that point, I'll start to believe that the bulls may start to have some traction. But until we get north of that 6750, guys, I think the bears are still going to maintain control. So we could see a break up, hit that zone, come right back down. Excuse me. So we're going to be watching this microstructure. If we look at this from a bearish, or excuse me, from if we pull our fib from our swing low, swing high, we can see that there we go. Get right on there. Swing low, swing high. We can see we had a perfect hit off of the 8865 fib right there at about 6100. It came right back up. Now we're laying right above the 786 fib level, which if that can hold, that would be very bullish, but I'm not sure that it's going to. As I said, more than likely, I think if it does come back down, we've tested this support many, many times since then of 6280, so I think there's a very high likelihood we'll come back down, test possibly a double bottom at 6100. At that point, if we test 6100, there's a chance, as I said, for a double bottom scenario where we hit it and bounce up. If that does break, I think it's going to be a very quick drop to obviously 600, or excuse me, 6,000. But more than likely there is some support at 6,000, no question. That's a great psychological number, so obviously that's going to act as support, but I think there's a high likelihood if that does break that we're going to come down into this support zone between 5850 and 5700, and that's going to be the prior low of 2018. If we break that low of 2018, guys, there's a very high probability we're going to go down to $5,000. If I come out here, we get our larger view, as I showed you guys here before on the weekly chart. Excuse me, we have this major ascending support line that's been in place since early 2017. So if this does break down, this demand zone breaks down on the weekly, it does come down to 5330. So I will still hold out hope, even if it does break down below that 5700. But more than likely, I think we're going to come down and test at least the bottom of this demand zone at 5330 on the weekly. Possibly have to come down lower and catch the bottom of this ascending support, so that'd be more like 5,000. If that breaks, if we break below this ascending support line, guys, I think unfortunately we could see a lot lower lows. The next hope would be the support zone between 4700 4300, and hopefully that would hold. But guys, there's just not a lot of support below that until we get down, until 3,500, somewhere thereabouts, guys. So, but we don't need to worry about that for now. We're nowhere close to that yet. Also, from a bearish point of view, guys, we can see this prior high when we had this prior bull run up to 11,500 on the stock RSI. Again, this is on the weekly chart. On the stock RSI, we can see that we had very, very clear hidden bearish divergence. So here was the high of 11.5 on the stock. We can see the next wave up went to 10,000. That was a major increase here on the stock RSI, creating a higher high. However, obviously on the price chart, we created a lower high. So again, that's hidden bearish divergence. That signaled that this bear run right here. That signaled this drop right here, the fact that we had that hidden bearish divergence. Now, from this point, excuse me, let me get rid of that actually here. Now, what do we have here? We have from this point to this point another lower high. If we look here, let me get rid of this. If we look here on the same point on the stock RSI, created a slightly higher high, which indicated this bear run, this drop that we're seeing now. But I do want you to notice how different the bullish, the bearish hidden divergence was here. This was very clear, very, very obvious. This is more lateral. Even though it's there, it's a little more lateral, not nearly as extreme. What does that indicate? To me, that indicates that we might not have the major drop that we had here. Here we had 1, 2, 3, 4, 5, 6, 7 weeks of a bear run. Here, this was, it just dropped for 7 weeks in a row. I don't know that we're going to have this here. I do believe that it's going to be a lot, possibly a lot shorter. So we could come back down, could possibly create a lower low than here, but might get caught around 5,000 and end up impulsing up here. And I think it might happen a lot quicker than this did happen. So maybe in 3 to 4 weeks rather than in the 7 weeks that this bear run took. So I'm not saying that is going to happen. I'm just saying that's a possibility just based on the hidden bearish divergence I'm seeing and the degree to which the hidden bearish divergence differs from the prior. So that just something to kind of keep in mind in the back of your head. So as I said, as we approach the apex, we can expect to break out one direction or another to the upside, guys. We're looking at that 6750. If we can get north of that 6750, that'll be north of the 618 fib level, guys, and that's going to mean algos might start picking targets once again to the upside. But once again, guys, that's going to be a very strong resistance, in my opinion, to take out. So let's zoom in here and see if we can see what's going on here on more of a micro level. Okay, we're looking at this microstructure here. As I said, we need to take out this prior high here at 6625. If we go swing low to swing high of our microstructure here, what do we see? We can see that price came back down. Perfect hit inside the gold pocket. Body came almost perfectly to the 618 fib, wicked into the golden pocket between the 618 and the 65 fib level, and then took back off. That was a bullish indication. However, it was very short-lived, and then we had this candle here where price came back down, was caught just a little bit, created a nice wick, which showed you the bulls are still fighting, and now we're sitting right on top of the 50. If we can stay on top of the 50, guys, that's going to be very, very bullish. If we can stay on top of the 50, I can look at this possibly. I could look at this possibly as the start of a third wave. Is that possible? And where we'd be looking at a 1, 2, and then coming up for the 3. Yeah, I mean, that's possible. Sure, that's very possible. So we got a 1, 2 coming up for the 3. Yeah, that's possible. But again, guys, we're going to have to wait and see how this plays out. I would be very, very careful. I'd be watching for a bull or a bear trap. Price breaks up, double tops here, breaks right back down. Possible price breaking down, double bottom maybe here at the 865 and then right back up because we had a hit off the 865 here before, guys. So possibly around 61.80, somewhere thereabouts, guys. Possible double bottom here at 61.28 as well. So two possible scenarios for a double bottom. If that does break, possibly double bottom down here. If we crash right through 6100, it'll be a very quick drop, obviously to 6, more than likely to 5900, somewhere thereabouts. We come in here, we look at our moving average and exponential moving averages. We can see on the 4-hour chart. Just zoom in here a little bit, guys. You can see a little bit better. We can see on the 4-hour chart, price has just been unable to decisively break above this 8-day EMA. It's a very bearish sign, guys. It's just been unable to. It's just been snaking right around it. We've got to break above it. We've got the 21-day EMA right above here, acted as resistance as soon as it came up. We need to see price come up. We need to see the at least a 4-hour candle opening and closing above this 8-day EMA, ideally above the 21-day EMA, guys, is what we need. And as I always say, as soon as you can, on the 4-hour chart, as soon as you can get above the 21-day EMA, when have an open and closed candle above the 21-day EMA, not just open, but close, or not just close, or not just open, but open and close above this 21-day EMA. So above without touching it, that's a very bullish sign. Oftentimes that triggers or that signals a change in momentum, at least in the short term. If we come out here and we look at the daily chart, we can see price is extended well below on the Bollinger Bands, bottom Bollinger Bands. If we look at, so obviously well below the 8-day EMA, we can see the 8-day EMA just dropped below the 50-day moving average. That's a very bearish sign. We can see the 21-day EMA drop below the 55-day EMA. Also a very, very bearish sign, guys. So all signs of weakness throughout the market. Let's check our longs and short positions. Looking at longs, longs are starting to drop. That's actually not a bad sign, guys. Market makers, usually if you're extended to one side or another, market makers like to go stop hunting and drive the price in the other direction. If we come in here and we look at our shorts, where are we? There we go. Look at our shorts. Let me come out to the 4-hour. We are way extended. Shorts are way extended. Retail investors are expecting price to drop. That's what retail investors are expecting. We're also seeing almost a wedge pattern here in shorts, indicating we might see a major move in one direction or another as well. But a little TA on short positions, if that's even possible. But this is very, very rare to see such a hike like this without any kind of a major correction at all. Sometimes we'd see it come down, move sideways at least, or a little bit of a correction before we saw and then back up. But this just straight line up is very rare. Tells me that we are long overdue for a correction. Tells me that very likely we're going to get the market makers are going to go stop hunting. Tells me that they might again fool the short people, take it down, possible bounce, and then right back up to liquidate all the short positions. Excuse me. Or they could immediately come bounce right back up, possibly hit a double top here, liquidate shorts. If that doesn't liquidate shorts, they might even bring it up here to the 618 fib level, guys. And sitting at the 618 fib is probably where a lot of people are putting, if they're shorting this market, probably a lot of stop losses are sitting up here at the 618 fib, thinking to themselves, if we go north of the 618 fib, that then the bulls are going to take control. So they put stops here. So you might see even a fake out up there where we wick just above the 618 fib, only to drop right back down. Again, going stop hunting, guys. So be very, very careful. Don't get into the trap of these people that want to take your money. Just be very vigilant. Always put your stops just past where you think they would. So in this case, if you are if you're going long, I would have my stops just underneath this wick, so sitting somewhere around 6,000. If you're going short and you're looking at the top of this, I would have if you're looking and using this as reference point, I'd have my stop sitting somewhere around 66.70 rather than sitting right here at the top of this wick at 66.25. Okay, if you're in this for the longer haul short, and you're a little more risky trader, I'd have my stops just above the 618, probably sitting somewhere around 68.40, 68.30, somewhere thereabouts. So just a quick, just a quick tip, guys. These market makers love to go stop hunting, love to liquidate, and then move things in the other direction. So I'm going to go ahead and wrap it there, guys. If you have enjoyed this video and you want me to keep making videos, please smash the like button or give me an upvote on Steemit or a Resteem. I'd appreciate all those. Till next time, guys, please trade safe. This is Working, signing out.